Good morning, good afternoon, and good evening, everyone, depending on where in the world you are, of course. Welcome to today's webinar, where we're diving into one of the hottest and most impactful topics in global trade, the latest tariff updates. I'm Seth Solis, and on behalf of the entire No Autumn Logistics team, thank you for taking the time to join us. As a global logistics partner, we know just how quickly tariff shifts can impact supply chains, bottom lines, and strategic planning. That's why we brought our in-house experts to break down the most recent changes to help you stay ahead. Feel free to use the Q&A feature throughout the session. The session is being recorded, so if you miss anything, don't worry. A recording will be sent out after the call. Today's session is designed to give you clarity and confidence. So without further ado, let's go ahead and get started. Christine, if you don't mind introducing yourself.
I'm Christine Smith. I'm the VP of Compliance and Process for No Autumn North America. Today we're going to have a lot of content that we'll be covering, and it is based on questions we've been getting over the last couple weeks from importers. So we'll dive right into it. So today we'll cover recent news, the tariff timeline, IEEPA and fentanyl reciprocal tariffs, customs entry, de minimis, automobiles and auto parts, Section 232, steel and aluminum and those derivatives, tariff mitigation strategies. We will take a deeper dive into some of those, and then ACH and customs bonds. So if we look at the most current news, what is being reported is that nearly 100 countries are in negotiations with the U.S. It's being reported that new country-specific tariffs could be defined within the next 2 to 3 weeks. So on April 22nd, Tuesday, the president spoke to reporters from the Oval Office, and when 145% tariff for China was referenced, he stated that it won't be anywhere near that high. It'll come down substantially, but it won't be zero. So we're seeing a lot of conflicting news over the last couple of days. We're monitoring it very closely. And as soon as we get more factual information, we will send out trade alerts. If you were on our last webinar, we've been covering the tariff timeline in the process. So we are getting announcements. We get executive orders, Federal Register notices, as well as CSMS messages from customs that give us further guidance. So I'm not going to go down the full list today. I'll start on April 9th, where we did get the announcement that the country-specific tariffs were going to be paused for 90 days, and that is with the exception of China. And then on 4/9, we saw the IEEPA reciprocal tariffs for China increase to 84%. On 4/10, the reciprocal tariffs increased to 125%. And then on 4/11, the additional exclusions for certain technology tariffs were announced. On 5/2, that is the expected date that's been announced for China and Hong Kong to become ineligible for the de minimis filing program. On 5/3, that is our expected date for the Section 232 25% on certain automotive parts to begin. And then again, the July 9th is that expected effective date for the end of the 90-day pause on countries' specific reciprocal tariffs. So we'll take a look back at the IEEPA fentanyl tariffs, and that is the name customs is given that tariff is IEEPA fentanyl. That's what it's combating. So this was the first set of IEEPA tariffs that we saw. Currently, the China IEEPA fentanyl tariff is 20%. Canada and Mexico are 25%, but there are USMC and other exceptions that can apply. We've been having a lot of questions still on whether this is a stacking tariff with the reciprocals. It is, and we know that as it's covered under 2 different executive orders. So if you look to the right of the screen, we've built a little bit of a flow chart for ease. So if your country of origin is China, we know that the 20% tariff is going to apply under 9903-0124. If your country of origin is Mexico, we have to ask, is the product USMCA, that US Mexico Canada Free Trade Agreement, qualifying? If the answer is yes, the IEEPA fentanyl tariff is not applied. If the answer is no, 25% applies. For Canada, we have to ask the same question. Is the product USMCA qualifying? If the answer is yes, no tariff is applied. If the answer is no, we have a couple more questions. We need to understand whether it's energy resources, those critical minerals, or potash. If the answer is yes, a 10% IEEPA fentanyl tariff applies instead of the 25%. And if the answer is no, that's where we see the 25% come in for Canada. So on April 9th, we did receive a new executive order, and that was modifying the reciprocal tariffs. And that order addressed that 90-day pause period on the reciprocal tariffs, with the exception of Hong Kong, China, and Macau. So effective April 10th, China, Hong Kong, and Macau, except where the exceptions apply, increased from 84% to 125%. So again, that's stacking with the original IEEPA fentanyl tariff, which that's where you're hearing a lot of people refer to 145%. Countries other than China, Hong Kong, and Macau, those countries will get a 10% tariff for the reciprocal, except where there are exceptions or exclusions that apply. So Customs did send us a CSMS message with further guidance, and the 99030163 number that's going to be your number for that 125% China reciprocal tariff, and 99030125, that is your tariff number for that 10% for all other countries, except where exceptions apply. So those are the two main numbers that you will be seeing on your entry summary. So if we look at the reciprocal tariff for the exceptions, most of those exceptions can be found in Annex 2 of the executive order, and there is a link on the slide to that annex. So articles subject to 50.1702B, those are some of your donations, media, those type things. Steel, aluminum, auto parts, autos that are already subject to 232 tariffs are exempted from the reciprocal tariffs. Copper, pharmaceuticals, semiconductors, and lumber articles. All articles that may be subject to future 232 tariffs. Now that has been questioned a bit, and there are a lot of trade attorneys taking a little bit deeper dive on that bullet point and the verbiage that Customs is using. So we'll get more clarity to you as soon as we get it. Bullion, energy, and other minerals that are not available in the United States, those are also exempted from the reciprocal tariffs. So for Canada and Mexico, the current IEEPA orders remain in effect. USMCA compliant goods remain duty-free. Non-USMCA compliant goods have 25% tariff. Non-USMCA compliant energy and potash are 10%. And in the event that the IEEPA orders are terminated, then USMCA compliant goods still get preferential treatment, and so they'll still be duty-free, while non-USMCA compliant goods would be subject to 12%. So that is in the event that the IEEPA orders are terminated. For the in-transit exception, we still are pending a lot of clarity from Customs, still seeing a lot of things go back and forth. We did get a message from the National Customs and Brokers Freight Forwarders Association with their attorneys' opinions. But at the end of the day, everybody is still going back to, we need further clarity from Customs. Basically, this is the only in-transit exemption in play. It is for goods that departed before 12:01 a.m. on April 5th. Again, that verbiage is for goods on a vessel at the port of loading and in transit on the final mode prior to entry into the U.S. before 12:01 a.m. on April 5th and entered into consumption or withdrawn for consumption on or after April 5th. We are applying that where we can. One call out is they are going to expire that in-transit tariff number on May 27th. So if you have goods that departed on a vessel prior to April 5th, prior to April 4th, that we're not filing entry until after May 27th, the in-transit exception will not apply. Semiconductors, on April 11th, we did get a presidential memorandum to clarify what those semiconductor products were. So they provided us a tariff listing. You may hear a lot of things in the news or people talking about, we think the semiconductor exception is going to be short-lived. And the reason is that there is a current Section 232 investigation for semiconductors. If that determination is that they're going to apply a 232 tariff, we would expect that maybe at 25%. And also, if that does happen, because it's 232, that would also accept it from the reciprocal tariff. So we're continue to watch those investigations, but for today, we are applying the exception for semiconductors so that they are not subject to the reciprocal tariffs. Customs entries on one of our initial calls in the series, we went over how to read a customs entry. We felt like it was time to do it again because some things have been added. So this is the current instructions for customs as far as the reporting order for the tariff numbers. With our entries, we always start when we're reviewing tariffs with the commodity tariff. Interestingly enough, that is the last tariff number that we are reporting to U.S. Customs. So our first required reporting is applicable 98 numbers, followed by Chapter 99 numbers for additional duties. And then we go into trade remedies. So the next thing we report is the Section 301, followed by the fentanyl, IEEPA fentanyl for China, followed by IEEPA reciprocal, followed by Section 232 or 201 duties, and then followed by 201 or 232 quota, and then followed by 99 for replacement. And then we go to quota, and finally we get down to the commodity tariff. One of the things that we did do is we provided a little bit of a cheat list for the current reciprocal most commonly used tariff and the exemptions. So anywhere you see a zero rate, that is an exemption. And then other rates would apply. And of course, on the 10% for all countries, we're on that 90-day pause until July 9th. So below that, we see a copy of a 7501. Here we can see that the 9903-8803 is Section 301. So we see that that 301 duty came in at 25%. On the next line, we see 9903-0124, which is our IEEPA fentanyl. That came in at 20%. On the next line, we see 9903-0163. That is our IEEPA reciprocal. This was from China. It did receive the 125%. It did not qualify for the in-transit. And then finally, we see the actual commodity tariff at 2.8%. So when you do hear people reporting 170%, this is kind of how that they're reporting that 170%. I would caution you when you do hear things on the news or the media to make sure you're fact checking or reach out and we can help fact check. We did have a lot of media reporting 245% tariffs after China went up to 125. But there was an excerpt that was taken from an executive order, but there was no new 245% tariff for China. It was just based on the current stacking. Some products, very few, have 100% Section 301 IEEPA, which is where the news was reporting the 245. But again, to be clear today, China IEEPA fentanyl is 20%, IEEPA reciprocal is 125%, that is your 145, and then most Section 301 is hitting at 25%. So de minimis shipments are, again, those shipments valued less than $800 per day per person. On April 2nd, if you recall, the government announced that de minimis would cease to be available for China and Hong Kong, and that would end on May 2nd at 12:01 a.m. What we are seeing in the background is we're getting messages over this past week from U.S. Customs as they begin to prepare for those entries to become formal entries. So we are seeing some changes in programming that are happening as we speak. We're going to continue to monitor this. If this is not affecting you as a company, it probably will affect you as a consumer as duties and taxes begin to apply to those e-commerce goods that you're ordering online. You may see those prices go up. So automobiles and certain automotive parts, we have covered this in the past, but we wanted to bring it up because we're coming up on that May 3rd implementation for the tariff or the effective date for the automobile parts. Automobile tariffs went into effect on April 3rd. Auto parts should go into effect on May 3rd. So if you recall, the duties for the automobiles are for sedans, SUVs, crossovers, minivans, and cargo vans and light trucks that are imported. And the parts are for key automobile parts, the engines, transmissions, powertrain parts, and electrical components. And it is called out in the order that processes are in place to expand the parts tariffs if they feel like they need to. So for United States-Mexico Trade Agreement, USMCA, importers will have the opportunity to certify the U.S. content of the vehicle, and the 25% would only apply to the non-U.S. content. For USMCA compliant automobile parts, those are going to remain tariff-free for now until they have proper processes in place. In the annex, and they're in the Federal Register, there are listings for those part numbers and vehicle tariff codes. So if you are questioning whether or not your automobile part will receive the 25% tariff, it is easily checked in the Federal Register notice, where they do have a listing of tariff numbers that are going to be impacted. Section 232, we've covered it. We wanted to cover it again today. This is one of the most common questions we've had over the last 3 weeks, is there's still a lot of confusion on Section 232 for the aluminum and steel. A lot of them the questions are around the derivative reporting. So for now, there is a flat 232 tariff for aluminum and steel at 25%. That became effective on March 12th. So the amendment removed the exclusions and the existing exclusions and country-specific agreements that had been in place. The Federal Register Annex does contain those derivative listings for aluminum and steel, and we put links at the bottom of the page. So if you're wondering if your product is impacted, you can check the 232 listings for derivatives and see if you see your tariff code on there. And then if you see your tariff code, if on there, you have to decide, is there aluminum or steel content? And if there is, then we need to apply the tariff to them. So for derivatives, for any steel or aluminum derivative that is sitting outside of Chapter 73 or 76, so those are the first 2 digits of your harmonized tariff code. If they're sitting outside those tariffs, then the Section 232 would only apply to the derivative content. If you're sitting in Chapter 73 or 76 and you're on the list, then the Section 232 tariff applies to the full value of the item. So one of the biggest questions that we have seen been asked is, how do you determine the value of the aluminum or steel content if the product is sitting outside of Chapter 76 or 73? So if you look under the Customs website, under the frequently asked questions, they kind of give an answer to that. We've been asked a lot, is that value determined on a percentage of the value of the product? Customs is not looking for a percentage. They are looking for the value of the steel or aluminum content, and that would be the total price paid or payable for the content, which is the total payment direct or indirect, exclusive of any charges, costs, expenses incurred for transportation, insurance, or related services incident to the international shipment. So again, what they're looking for is that value. We've also been asked a lot of questions as how brokers are reporting this information to U.S. Customs. We are reporting two different tariff lines, and they're not linked. So for the first tariff line, we would report the commodity code, and then we're reporting the total entered value of the product less the aluminum content. And on the second line, that's where we're reporting the commodity tariff with the value of the aluminum content. So it is two separate lines that are going up, and you'll see two separate lines broken out on your entry summary. Tariff mitigation strategies. We've covered this slide many times before. Today, we're going to go over some slides and take a more in-depth look at foreign trade zone versus bonded warehouse. We're going to go a little bit more in depth on first sell. Duty drawback, we have seen a rise in interest in duty drawback. The only reminder I do want to put out there on duty drawback is the first Section 232 or IEEPA fentanyl. You cannot reclaim duties by using duty drawback. For IEEPA reciprocal, you can. The other one that is a call out over the last few weeks, we're getting more and more importers that we're working with on tariff engineering. What is the most cost-effective way to bring those goods into the U.S.? If they're manufactured overseas, is the duty cheaper? Is it easier or more cost-effective to bring the parts in and then assemble them in the United States? And how am I shipping those goods? Can I ship them differently? That would have a duty impact. So we are working with a lot of clients on tariff engineering. So we want to take a look today at bonded warehouse versus foreign trade zone. So if we look at the definitions, U.S. Customs defines a bonded warehouse as a building or other secured area in which imported dutiable merchandise may be stored, manipulated, or undergo manufacturing operations without payment of duties for up to 5 years from the date of importation. Foreign trade zones are defined as secure areas located in or near U.S. Customs ports of entry, but legally considered to be outside the U.S. Customs territory for the purpose of tariff laws and for customs entry procedures. So again, those foreign trade zones are sitting in the United States, but they, for customs purposes, are not considered to be within the U.S. territory. So if we start looking at the advantages and the difference between bonded warehouse and foreign trade zone, the first thing we'll take a look at is storage. So again, bonded warehouses can store goods without duty payment for up to 5 years. Foreign trade zone, that time is unlimited. Duty deferral, duty for bonded warehouse, duties and taxes are deferred until withdrawal. And for foreign trade zone, they're deferred until U.S. Consumption. So in both cases, it's really when the goods are going out of the zone or the bonded warehouse that you're paying those duties. So it's a great way to help manage cash flow, to withdraw goods as you need them versus paying duties on all goods at the same time. You can defer that until you're coming out of the foreign trade zone and bonded warehouse after you've sold the goods, or if the goods are already sold as you need them. The next thing we'll talk about is duty avoidance. Bonded warehouse and foreign trade zone are both great avenues for duty avoidance. Both can hold goods. Goods can be exported without payment or entering into the U.S. commerce. So in other words, if you have goods that you're going to export, you can hold them in either type warehouse, and you can export them without ever paying duties. So it's always easier to not pay the duties than it is to try to go and recover them. Duty rates. This is where we've seen a huge shift. Everyone was looking at foreign trade zone, but now we're seeing a huge shift to bonded warehouse. And that is because the bonded warehouse, the duty rate is the duty rate in effect at the time of the withdrawal of the goods. For foreign trade zone, the duty rate is dependent on the status. So the rate will either be the date in effect at the time of the admissions into the foreign trade zone or the rate affected at the time of withdrawal. So if you take a look at the box at the bottom of the screen, you'll notice that with the IEPA tariffs, those reciprocal tariffs, you're going to see in the executive orders and the customs instructions that customs is saying unless the goods are under a foreign trade zone domestic status, which would be domestic goods or goods perhaps where they've been exported, duties have already been paid and being reimported. If it's not a domestic class good, then the US government is saying that you must admit the goods as a foreign privilege status. So what that does is when you enter them as a foreign privilege status, the duty rate in effect at the time you enter into the foreign trade zone is the duty rate that will be paid. So that is why we're seeing a big shift from foreign trade zone to bonded warehouse. We have a lot of importers who believe that maybe these tariff rates won't hold. So they're going to put them in the bonded warehouse and pay the duty rate in effect at the time of withdrawal. And for foreign trade zone with a foreign privilege status, if you enter into the admission, when you admit into the warehouse, that day that you're doing the admissions, again, you're locking in that duty rate. So if we look at warehouse activities, bonded warehouses can store, manipulate upon customs approval and with supervision sometimes. So if you want to manipulate goods in a bonded warehouse, we have to file a manipulation permit. And with that, customs will typically approve it, but they may ask to supervise the manipulation. Even though it says, and it's a little bit misleading in the definition of bonded warehouse, that you can manufacture, it's not easy to do in a bonded warehouse. So if you want to manufacture in a bonded warehouse, it must be a Class 6 bonded warehouse that's approved for manufacturing. And you can only manufacture goods in that bonded warehouse if the goods will ultimately be exported. So you cannot manufacture to bring it into U.S. commerce. Foreign trade zone is a bit opposite. That is where you can very easily manipulate, manufacture, repackage, and assemble goods. Domestic goods are not permitted in a bonded warehouse. However, on a foreign trade zone, they are allowed to be admitted and can be commingled. Inventory taxes, those are your state local taxes. So for the inventory taxes in a bonded warehouse, the tax is paid January 1st of each year. For a foreign trade zone, remember we said those goods are still considered foreign goods, so they're not taxed. And then we come to merchandise processing savings. So on a bonded warehouse, there are no applicable savings for the merchandise processing fees, which are assessed on all your customs entries. But when the foreign trade zone's been granted a privilege, they can combine multiple shipments into a single entry for the week. And therefore, if you hit that maximum merchandise processing fee, I think it's $635 roughly, you're only paying it once. So for example, this week, if I filed 5 entries and my articles are high value, and I hit that $635 maximum 5 times, I would have to pay it 5 times. However, if I were in that foreign trade zone, I combined to a single entry, I would only pay that maximum is roughly $634 and some change. I would only pay it 1 time. So that is where over a period of a year, you can see a big savings with merchandise processing fees. So how do you decide whether you need to go into a bonded warehouse or foreign trade zone? And some of the questions that you need to ask is what activities do you need to perform? Again, foreign trade zones are offering manufacturing and manipulation. How long do I need to store the goods? Is it more than 5 years? Compliance considerations, we do have importers that are setting up their own bonded warehouses in their own foreign trade zone, and that is something NOADM helps with. So when you are looking at, if you're not going to use a third party and you're looking at setting the one up, it's important to note that bonded warehouses have less regulatory requirements and foreign trade zone have more complex regulations. As you can imagine, when you're manufacturing, there's a significant amount of reporting and paperwork that has to be maintained. Tariff mitigation. first sale. So we wanted to take a little bit deeper dive into first sale today. We do have many importers taking advantage of the first sale rule. So all articles coming into the US must be appraised. And the most common method of appraisal is the transaction value. And that is defined as the price actually paid or payable for merchandise when sold for exportation into the US. So the presumption is that the transaction value is based on the price actually paid by the importer for the imported merchandise. However, when there are multiple sales of goods prior to importation into the United States, the first sale rule can apply to qualifying transaction. And what that does is it makes the price between the middleman and vendor and the manufacturer the price that you're reporting to customs rather than the price between the middleman and the vendor and importer. And so usually that is a lower transaction value, which would then calculate to lower duties. So if we take a look to the side of the screen, you'll see where the factory is selling to the vendor, and that is your first sell, and then where the vendor is selling to the importer. So if we look at an example of an estimated, the factory sold to the vendor for $1.2 million duties, and the vendor sold to, I'm sorry, $1.2 million in merchandise fees. And then the vendor sold to the importer at 1.5 million. I'm sorry, said that wrong. The vendor sold the goods, the factory sold to the vendor at 8 million. The vendor sold to the importer at 10 million. We're factoring 15% duty rate. So if we look at the duty differences after the calculation, the annual duty savings is 300,000. So what are your basic requirements for first sell? So the basic requirements for first sell is you have to have 2 back-to-back bona fide sales have to exist. So the evidence to support bona fide sales are your purchase orders from the US purchaser to the vendor and from the vendor to the factory, the commercial invoice to the US purchaser from the vendor and to the vendor from the factory, proof of payment from the US purchaser to the vendor and from the vendor of the factory. The second thing that you need to have is the first sale has to be clearly destined for the export to the US. So the commercial invoices from the middleman to the manufacturer need to indicate that the products are ultimately destined to the US. Bills of lading or other documents from the manufacturer indicating the US as the final destination of the goods. And the third thing that needs to apply is the first sale value must be at what they call an arm's length. It needs to be fully costed price when the factory and the vendor are related. So things to consider when we're talking arm's length is, do the related parties establish prices in a manner that are not influenced by their relationship? Do negotiations take place between the related parties? Are the prices fixed in a manner consistent with the normal pricing practices of the industry? And does the manufacturer recover operating profit comparable to companies selling similar merchandise? So again, if we look at the example on the side of the screen, we see where the manufacturer has sold goods to the middleman at $10. And then if we follow the red line, we can see where the middleman is selling to the importer at $11. And then what we're reporting to US Customs, if it was the regular sale, we would report that $11 where the importer purchased it. But if we're using first sale, we would report the $10 price from that first sale value. And that is where we see the duty savings. So we're reporting a lower value, and then the duty calculation to US Customs is lower based on that lower value. So hopefully you're receiving our trade alerts. We did send out a trade alert on informing importers to please be careful and check with your banks. As duty rates are increasing, you want to make sure that your banks are not having any debit caps to block the payment to the US government on your statements. So again, if you're having your own importer's ACH statement with Customs and you see your tariffs going up, please check with your bank and make sure that there is no debit cap. What happens is if that transaction doesn't go through, you are going to get a late statement penalty, and Customs can remove you from that periodic monthly statement program. So again, this is very critical. Customs bonds, we've talked about bonds in depth, and we wanted to bring it up yet again. We're going to keep talking about it. I can tell you last week, we already began to see quite an influx of bonds that are saturating. So customs bonds are required on goods imported that are over $205,000 in value, or that they have federal government agencies, other federal government agencies involved. Customs bonds ensure the payment of delivery, re-delivery of goods, compliance with regulations, among other things. So what happens when a customs bond saturates is when the duties, taxes, and fees are more than the bond amount prior to the renewal date. When that happens, you get a letter from Customs saying that your bond is saturated and that you need to cancel that or terminate that bond and put a new bond in place for a higher amount. The letter from U.S. Customs does tell you a minimum amount, but before you just jump on that minimum amount, we are asking that you really do forecast to ensure that that amount's going to cover and be sufficient for the next year. So again, look at the tariffs, consider your forecast and how much you're going to ship before you determine the amount of the new bond. What we want to avoid is bond stacking liability. Now, if you do get that saturation notice, we would ask that you reach out very, very quickly. And the reason for that is that as the bond amount increases, the bond surety is going to ask for more things. They're going to ask for financial information. They're going to ask for potentially collateral or a letter of credit. And it takes time to put those things in place and get them reviewed. So again, if you get a letter, make sure that you're acting very quickly. Customs bonds amounts, after you do your forecasting, it's important to know how those amounts are determined. They are based on customs total duties, taxes, and fees times 10% for the previous or next 12-month period, whichever is the greater amount. If the minimum bond is 50,000 and those bonds are rounded up to the nearest 10,000. However, if your bond estimate for the duties, taxes, and fees exceed $1 million, then the rounding is to 100,000. So that kind of concludes our tariff seminar for today, or webinar. So I'm going to turn it back over to you, Seth, for any Q&A.
Thank you, Christine. A lot of information covered, right? Yeah, so we do have a few questions that we did see come in online. So I'm going to go ahead and get right into it. So one of the questions that we received was, is the 90-day pause considering the export date?
That's a great question, and we've had that question a lot over the last couple of weeks. The answer is no. That 90-day pause is based on entered for consumption or arrival date. The only thing that we're really tying to the departure date at this time is that in-transit exception. But for the 90-day pause, that is again based on entry consumption, not the export date.
Okay. Hey, and Christine, if you could stop sharing your screen too.
Thank you.
So another question that we also saw online was someone said, I saw a news articles reporting China tariffs were 245%. Is that correct?
That is not correct. It's correct and it's not correct. So 245% is the most extreme case but it is stacking. It is not a flat tariff. So that would be for your electrical vehicles or some pharma that are getting Section 301 at 100%. That is where we see that value, but it is not that IEEPA was increased. IEEPA fentanyl is 20%, IEEPA reciprocal is 125%. The media had picked up on not doing the stacking, so it's created a lot of confusion.
Okay. Glad it's not that much. So here's another question. Is there a minimum amount of aluminum or steel content required for Section 232?
There is no minimum. Customs is very clear that there is no minimum amount. Any amount is to be reported.
Okay. And we don't have a ton of time, so probably only one more online. Um, Here's a good one. Is there a certification required for the aluminum content?
At the time of entry summary, no, there's not a specific certification required. However, customs can come back and ask you at any point to validate and certify how you got or ask for the certificates on how you derived at that value. But at the time of entry, there is not a specific certification that is being required.
Okay. Hey guys, unfortunately, that's all the time that we have for questions today. I see a lot of them coming up in chat. We just don't have time for that today. I'm so sorry. We will answer you guys though. Note that we are taking notes of these questions that you guys are sending now. But yeah, thank you guys so much for joining. We run out of time, uh, and we're so grateful for you guys to have joined us and viewed this webinar. Uh, that'll be it. Thanks, Christine.
Thank you.